Breaking news. Something huge just happened between the United States and Canada, and it could shake the entire world economy. Reports say the United States Department of the Treasury has taken a shocking step. It has banned Canada from using the US dollar in certain official transactions. Yes, the dollar, the currency that runs global trade, the money that most countries depend on. And Canada is one of America's closest allies. This is not a small disagreement. This is a serious crisis. And what happens next could change everything. Because Canada did not stay silent. Prime Minister Mark Carney fired back. Fast, strong, direct. And then, in a surprising twist, billionaire investor Warren Buffett responded. When Buffett speaks, markets listen. So what is really happening? Let's break it down in simple words. The U.S. Treasury is the government department that controls America's money system. It manages the dollar. It controls financial rules. It can block countries from using the U.S. banking system. When the Treasury bans a country from the dollar system, it means that country cannot easily use U.S. banks to send or receive money in dollars, and the dollar is the most used money in the world. Oil is priced in dollars. Big trade deals are done in dollars. Global loans are in dollars. If you are blocked from the dollar, trade becomes harder, much harder. That is why this move is explosive. Now here is the real issue. Why would the United States do this to Canada? Canada is not an enemy. Canada and the U.S. share the longest peaceful border in the world. They trade hundreds of billions of dollars every year. They are military partners. They work together in security. So what changed? Sources say tensions have been rising for months. There have been disputes over trade rules, disagreements over energy exports, conflicts over tariffs. Tariffs are taxes on goods coming into a country. Higher tariffs mean higher prices. There have also been sharp disagreements over financial regulation. The U.S. believes Canada may be supporting financial actions that weaken American control over global trade. Canada says that is not true. But Washington is not convinced. This is where things get serious. The Treasury's action does not mean Canada cannot use dollars at all. It means certain Canadian government-linked financial institutions face restrictions. Restrictions mean limits. Limits on how they access U.S. banks. Limits on how they clear payments. Limits on certain types of cross-border transactions. That may sound technical, but the impact is real. If Canadian banks struggle to move dollars, businesses feel it. If businesses feel it, workers feel it. If workers feel it, families feel it. Prices can rise, loans can slow, investments can freeze. Now pause for a moment. Think about this. Canada's economy is deeply connected to the United States. Most of Canada's exports go south to the U.S. cars, oil, gas, wood, food. If dollar payments slow down, trade slows down. And when trade slows, jobs are at risk. But here is what shocked Washington. Mark Carney did not step back. He stepped forward. Carney is not new to financial battles. He is a former central banker. He understands markets. He understands pressure. And he responded with force. He said Canada will defend its financial sovereignty. Sovereignty means the right to control your own system. He warned that Canada could expand trade in other currencies. That includes the euro, the Chinese yuan, and even digital payment systems that bypass traditional banks. Bypass means go around. And that is a big threat, because the power of the U.S. dollar depends on global trust. If major countries move away from the dollar, that power weakens, slowly, then suddenly. But that's not what really matters. What matters is confidence. Markets run on confidence. If investors believe the U.S. will use the dollar as a weapon against allies, they may rethink their exposure. Exposure means how much money they have connected to that system. This is where Warren Buffett enters the picture. Buffett is one of the most respected investors in the world. He rarely comments on political conflict. But when asked about the situation, he gave a careful but powerful response. He warned that financial tools must be used wisely. He said trust takes decades to build and seconds to damage. That line hit hard. Because he is right. The dollar is strong not only because America is powerful. It is strong because people trust it. Central banks around the world hold dollars. Governments store dollars. Companies price goods in dollars. If that trust weakens, the global system shifts. Now let's talk about daily life. What does this mean for normal people? In Canada, banks may face higher costs to borrow dollars. If banks pay more, customers pay more. Mortgage rates could rise. Car loans could rise. Business loans could rise. Imported goods could become more expensive. Electronics, medicine, machinery. In the United States, it is not risk-free either. American companies that sell to Canada could face delays. Farmers could feel it. Manufacturers could feel it. Energy companies could feel it. And markets do not like uncertainty. Uncertainty means not knowing what will happen next. Stock prices move when fear rises. We have already seen volatility. Volatility means prices jumping up and down fast. Investors are watching closely. Now here is the deeper background. For years, many countries have quietly discussed reducing reliance on the US dollar. Russia did it after sanctions. China is pushing its own currency. Some Middle Eastern countries are exploring alternatives. But Canada was never seen as part of that group. Canada was seen as a stable partner, a safe ally. If even Canada faces restrictions, other nations may start asking questions. And that is dangerous for Washington, because the dollar's strength gives America huge influence. If you control the main currency, you control global finance. But power used too aggressively can push others away. That is the delicate balance. Carney understands this. His response was calm, but firm. He said Canada will protect its banks. He said Canada will expand currency partnerships. He said Canada will not be pressured into economic submission. Submission means giving up control. Strong words. Very strong. And what happens next could change everything. There are several possible paths forward. One path is negotiation. Behind closed doors, both sides may talk. They may agree on new financial rules. They may find a compromise. That would calm markets quickly. Another path is escalation. Escalation means the conflict gets worse. Canada could restrict American financial firms operating in Canada. The U.S. could expand restrictions. Trade tensions could grow. That would hurt both sides. A third path is long-term shift. Canada may slowly diversify its reserves. Diversify means spread risk. Instead of holding mostly dollars, it could hold more euros or other currencies. That would not happen overnight, but even small moves send signals. And signals matter in global finance. Now let's zoom out. Why is this happening now? The global economy is already fragile. Inflation has been high. Debt levels are high. Growth is slowing in many countries. When systems are stressed, governments act defensively. They protect their own interests, sometimes too aggressively. There is also political pressure. Leaders face elections. They face public anger over jobs and prices. Taking strong action can look powerful, but strong action can also create backlash. This situation sits at the center of all these forces: economic stress, political tension, global power shifts, and financial control. Now think about energy. Canada is a major energy supplier. Oil and gas flow south to the U.S. If financial tensions spill into energy trade, fuel prices could react. Higher fuel prices mean higher transport costs. Higher transport costs mean higher food prices. It spreads fast, like dominoes falling. But that's not what really matters. The bigger issue is precedent. Precedent means example. If the U.S. sets the example that even close partners can face dollar restrictions, other countries will prepare backup plans. They will build alternative systems. They will create new trade networks. Slowly, the world could split into financial blocks. Blocks mean groups. One group using the dollar, another group using different systems. That kind of division reduces efficiency. It makes trade slower. It makes borrowing more expensive. It reduces global growth. Warren Buffett hinted at this risk. He did not criticize directly, but his warning about trust was clear. Trust is the backbone of finance. Without trust, contracts mean less. Banks hesitate. Investors hesitate. And hesitation slows economies. Now let's consider market reaction. If investors believe this conflict will last, they may move money into safe assets. Gold could rise. Government bonds could rise. Risky assets could fall. But if negotiations begin, markets could recover quickly. This is a high-stakes moment, very high stakes. Both sides must calculate carefully. Too much pressure could backfire. Too little response could look weak. Carney is walking a tight line. So is Washington. And the world is watching, because if this dispute spreads, it could reshape alliances. Europe will watch closely. Asia will watch closely. Emerging markets will watch closely. They will ask one question: can we rely on the dollar system long-term? That question alone can shift behavior, even if the ban is limited, even if it is temporary. Perception is powerful, and perception spreads faster than policy. Now here is something important. Financial systems are deeply connected. Banks lend to each other across borders. Investment funds operate globally. If restrictions tighten, liquidity can shrink. Liquidity means how easily money moves. If money cannot move freely, stress builds. Stress builds quietly, until something breaks. That is why central banks monitor these events carefully. They prepare emergency tools, swap lines, liquidity programs, coordination calls. They do not want panic. Panic is the real enemy. So what should viewers understand? This is not just about politics. It is about financial power. It is about who controls global money. It is about trust. It is about influence. And it is about the future structure of the world economy. We are at a sensitive moment. One decision can ripple across continents. One speech can calm markets or ignite fear. Right now, leaders have a choice: cool the situation or harden positions. Carney has shown he will not fold easily. Washington has shown it is willing to use financial leverage. Leverage means pressure through economic tools. Buffett has reminded everyone that trust is fragile, and what happens next could define the next decade. Will this crisis fade quietly? Will it grow into a deeper financial divide? Will negotiations restore balance, or will new alliances emerge? These questions are not abstract. They affect jobs, savings, pensions, investments, energy prices, food prices, everyday life. This is not distant diplomacy. This is real-world impact. Right now, the situation remains fluid. Talks may already be happening behind closed doors. Markets are waiting. Governments are calculating. Investors are hedging. No one wants escalation, but no one wants to appear weak either. That is the tension. That is the pressure. And that is why this moment matters. Because when allies clash over money, the signal is loud. Very loud. The dollar has long been the anchor of the global system. Anchors hold things steady. If the anchor shakes, ships drift. The world does not change overnight. But shifts begin with moments like this: quiet decisions, unexpected bans, sharp responses, careful warnings, and then history moves. We are watching one of those moments now. Stay alert, stay informed, because this development is still unfolding, and what happens next could change everything. Comment your thoughts below and subscribe for more global power updates.